Robert Parker, Senior Advisor at Credit Suisse, joins in on the show. Robert, hi, morning. Firstly, the biggest IT giant in India, Infosys, came out with a very disappointing set of numbers. Does it raise doubts about the Indian outsourcing story that has had a great potential in the past, or you think that, in this competitive environment, TCS and HCL Technologies may take over, so it's a shift in leadership in the sector that can change the view on the sector overall?
I think the outsourcing theme for the Indian economy certainly is durable in the long term. Having said that, in the short term, I think we've got to look at the fact that one of the major clients for the outsourcing industry is the European and American financial sector. And given the downturn of activity amongst the banks, the investment banks, the brokerage firms, inevitably the flow of business from the financial sector to outsourcing companies such as Infosys, obviously that there will be a downturn in activity. So I think in the short term, inevitably, outsourcing is still a valid concept, but volumes and profitability will be down. One positive, which obviously improves the economics of outsourcing, has been clearly the reversal in the Indian rupee, which improves the economics of outsourcing.
What are expectations on corporate India earnings this season, Robert?
I think the numbers are going to be poor, and the reason why I say that is that clearly the second quarter was yet again a weak quarter. The global economy started to weaken from April and May, and as a result I think there is a high probability that the corporate earnings numbers for the second quarter are probably going to be worse than the first quarter. Having said that, the weakness of commodity prices and the weakness of the currency should actually support export-orientated companies and also companies which are very reliant on commodity input prices. So where companies are more vulnerable to domestic demand, I think that is going to be the area of weakness.
Robert, also the IIP numbers came in at 2.4%, which still raised concerns for management of growth versus inflation. What's your view on where India will stand versus other emerging market economies to face the problem as the central bank continues to focus on inflation?
Well, I think the first point to make is that the inflation numbers obviously have been elevated, but as we go into the second half of the year, I think the inflation numbers should actually start to improve. First of all, given the weakness in commodity prices, and secondly, given the weakness in the economy in the first half of this year. So I think the problem for the RBI actually should ease up somewhat. Having said that, monetary policy in India is going to be very difficult, given what we've had over the last 3 months of a weakening economy, a weakening currency, and higher inflation, and all of that makes actually monetary decisions very complex.
So all retailers are back in focus, Robert, as the government mulls diesel price hikes. Does the sector interest you?
We have gone long the energy sector worldwide, and the reason for that is because we take the view that oil prices are forming a base at current levels, and generally worldwide the energy sector is cheap relative to other sectors, and oil companies, whether it's wholesale or retail, are cheap relative to oil and gas as a commodity. In terms of the Indian sector, clearly with subsidies potentially being reduced, one has to ask the question, to what extent does that improve the profitability of the companies? And one of the issues, of course, is that if the price at the pump goes up, then one might actually have a dampening effect on demand, which would impact the companies. So globally, I like the energy sector. Potential action on subsidies in India isn't, in my mind, a clear buy signal.
Robert, you believe that the second quarter of 2012, when we would see a reversal / outperformance by emerging markets that has started to pick up again, is that reversal likely to come by now for India?
Our view is that as we go into August, after this period of weakness in global equity markets in July, which I would regard as a minor correction, that we are going to see a trend improvement in equity markets in August for most of the rest of the year. You know, we may see some volatility in mid-September, but I think equity markets at the end of the year will be higher than they are now, and that would include India. And the point I would make is that overseas investors are heavily underinvested in emerging markets, and given the performance of the Indian market since really April, they are certainly underinvested in India. So I think on a flow of funds analysis, there are strong arguments for saying that the trend will be towards higher markets over the balance of the year.